when you're doing your digital asset accounting, there are some other considerations. Back in 2024, they actually clarified how digital asset accounting should be done. And there were two big shifts. One that's most important for the topic right now, which is shifting from universal to account-based, meaning you used to pool all digital assets into one cost basis pool and apply a accounting method to it. Going forward, you need to now apply an accounting method not only on a per asset basis, but on a per wallet, per account basis. So you're not going to pull all the assets into one major account. So this is approached differently for different taxpayers, or taxpayers who have historically tracked universally. May make sense to continue with the universal calculation until the transition period after 2024. And then you have to take an additional step with an allocation procedure in order to shift from universal to account based. Now, there was a specific timeline that this had to be completed if you were going to qualify for a safe harbor, which is passed. But if you are a taxpayer that still has your books on universal, you're going to have to make that shift. And for some taxpayers who are maybe completely not compliant, it also can be considered, should you start from account based from the start if this is going to be the first time that you're doing the calculation. So, this is very important because this changes the cost basis calculation significantly depending on how these assets are batched in, the ordering and the accounting methodology and how the cost basis really pulls together. So you want to get this correct for the prior year reconstruction. But something else I see is that a lot of people are still unaware of this, even to this day. And you need to make sure that you're operating under the correct methodology as you move forward into future years later, and you're considering this revenue procedure. So I've done completely separate videos on this, and there's a lot to unpack with this from a compliance standpoint, even from a tax planning standpoint. So I encourage you to go and watch those videos. Now, one challenge that is common in most historical accounting and cost basis reconstruction engagements is, because we're going back maybe 5-10 years, right? It's going to be very rare that we work on an engagement like this and we just have perfect, pristine data. There's usually going to be some common data gaps related to exchange shutdowns, and maybe the taxpayer didn't get the CSV. Maybe the CSVs that are coming from an exchange that they did save them from, maybe it's not fully complete or not formatted correctly. Maybe they're interacting with a certain protocol. When you pull down the data via an API, there's indexing gaps that need to be filled in if we're going to get to correct flow of funds and tax characterization. Maybe we're working with a client where, because they've had so many wallets for the past 10 years, we're seeing some information on chain that's showing funds going to a wallet, and they didn't disclose that to us. And we need to figure out, do they own this wallet? Is this a friend's wallet? What is the nature of this transaction? So this is where properly reconciling transactions and tracking and tracing the transactions through the whole flow of funds, through all the on-chain transactions that may be taking place, is really what it takes to piece this together. So, you can't just take your wallets and take your exchanges, plug them into one of these crypto tax softwares and think everything's going to be accurate.